Yeah, so basically we're looking at how to trade crosses or how to even trade any currency pair, like 1, 2, 3 step to trade currencies or crosses. Okay. So I said earlier on, the first thing we want to do is we want to look at the macro perspective. Okay, how to arrive at a trade idea even without looking at the chart at all. And that is very, very, in fact, that's the backbone of what we do. Okay, you want to know what the market should do without looking at the chart. Okay, because we are trading currencies. When we are selling, say, a pair, what we're actually doing is that we are selling a currency and buying another one. Okay, and if we are selling a currency, what we are saying is that that currency is a currency of a country. That means they should have a weak economy, right? And there are specific things that we look at that will help us to know if a currency is going to be weak, right? Or if a currency is going to be strong. Okay, because what we capitalize actually on is we want to bring a currency that is strong and pair it with a currency that is weak for us to arrive at either a buy or sell idea. Okay, so when we now have that buy or sell idea, that is when we will now transpose it to the chart to generate buy and selling signals. Okay, we got that right? Okay. Yeah, so now what we actually use to do that is, one, we look at the commitment of traders data. So commitment of traders data show us the net holdings of commercial traders, of non-commercial traders, of senior speculators like us, and another group I don't want to mention or even know. Okay, so basically it shows the position of 4 traders. Okay, the other one is non-reportables. Okay, so the position of traders or category of traders we actually are concerned about are commercial traders who are actually edgers in the marketplace. Okay, so they edge their physical holdings in the market, in the futures market. So, and these commercial traders want to be knowing or want to be following them because they are actually the movers of the market. Okay, so when they are buying, the market will be doing the reverse of that. Okay, so they are trend starters. Okay, and when they are selling, the market will be buying. Do we understand that? Okay, and we can actually get that information from tradingstar.com to check the COT data, or we use barchart.com for chart analysis. Okay, so say I want to trade the pair now, the currency pair, Canadian dollar, Japanese yen. I will check the commitment of traders data, what the commercials are doing. Okay, like I said, you can find that data on tradingstar.com. I'll check what the commercials are doing on Canadian dollar, and also check what the commercials are doing on the Japanese yen. Okay, so ideally, what I want to see is strength in one and weakness in another. Okay, but if there is strength in both of them, I will just neglect that idea of trading that currency pair. So this is the Canadian dollar. Just go to tradingstar.com. You should bring out this, then you go to Canadian dollar. I'm clicking on the COT legacy, not COT now. So I'll click on the COT legacy, and it should bring out this. Okay, my concern or the category of traders I'm paying attention to are the commercials. Okay, what are the commercials doing? I need to show it whether they are long buying or selling. Okay, like I said earlier on, market or those price charts we just saw right now for that currency pair will be doing just the exact opposite of what these guys are doing. Okay, and here we can see that they are heavily net short, meaning that price should be what? Anyone with me here? Price should be buy. Cool. So if price is selling, if they are selling, okay, which is short, right? Market should be buying. And if they are buying, that means market should be doing what? Selling. I want to be sure our princess is following and getting it. Okay. So, yeah. So, well, here right now, the margin is not really wide. So I don't really love this kind of a scenario. So in the case where the margin is not high here, I will go to barchart.com and want to look at the chart to see vividly what it is actually doing. Okay, that's that. So I said earlier on I want to trade CAD Japanese yen. So I've checked for Canadian dollar and it's suggesting higher prices. Why? Because the commercials are heavily net short. They are selling. Then price should be buying. Okay. Yeah. So that's that on that. Then I'll check for Japanese yen. I said I do want to trade CAD Japanese. I'll check the COT legacy and what for the Canadian, for the Japanese yen, okay? So looking at what the commercials are doing here, right? So the net long holding is 215,563, while the short holdings is just 95,000 plus. Okay, from here, what are the commercials doing?
If they are net long, they are buying.
They are buying, right? So, Princess, please let Princess.
Yes.
So the commercials
Okay.
buying, right? So what should the market be doing?
You should be selling.
Perfect. Glad you got that. So since they are buying, market should be selling. So, right? But the other pair we looked at, the other currency we looked at, rather, that's Canadian dollar. We have already established that they are net short, which means market should be buying, right? But here now, Japanese yen, market should be what? Selling. So if we now match, so that means that Canadian dollar should be strong, and this currency should be what?
Weak.
Should be weak. So we can now match a strong currency, a weak currency, right? So when we match a strong currency with a weak currency, then we should be buying that currency pair, right? So once we buy CAD, Japanese yen, do you understand that?
Yes.
So without looking at the chart at all, we've already have a trade idea whether we should be buying or selling, and that is how we do it. Okay, it's not just the chart, right? So we'll now go to the chart and try to see if what we are now seeing or establishing outside of the chart is true, right? So we did start from the monthly time frame and see. Of course, we apply everything I've taught, like blocks, like breakers, like fair value gaps, liquidity pools, buy stops and sell stops, rejection blocks, and the likes. Okay, so we just mark out those levels right there. That's a rejection block right there. A drawn price or drawn liquidity, and we have that same. So I've also marked out here on the weekly time frame. That's why I marked out these levels right there. But we can also see from here on this monthly time frame that we do also have a bullish order block here, which I don't think price should come back into now. All right. Okay. Then if you notice here, even though I've not taught this before, in a buy profile or in a market maker buy model, whatsoever was used to push price lower before, whenever it's broken to the upside, it should be a catalyst to push price higher. Okay, let me show you that here. Now this bearish order block here that was broken, it was responsible to for pushing price lower. Okay, and the idea behind this is that whenever it is broken to the upside, so we expect price to come into it and reject off it and push higher. So that's all. That's even though we haven't gotten there, but you don't really actually need to know that. But the ones I've talked to, like fair value gaps, rejection blocks, liquidity pools, bullish order blocks, all those should actually do. So going down to the weekly time frame.
I'm the
Go ahead, boss.
Okay. The if we just mark out that how do you call it a break on?
No, that's a reclaimed order block, right?
It's breaking. Like I don't think it's usually used most often.
I do use it, or it's not common, kind of. But here, before I've actually established that I don't really want price to come back into this fair value gap. So this kind of add more confidence to that my idea of not wanting price to come down to this fair value gap, right? So if we now go down, so like I said, we do have a contraction, and after a contraction, the next thing that should actually happen is expansion. Okay, so when price is contracted in a range, and what this is actually doing here is actually painting a false resistance level. Now, what retail traders are seeing is hammer. These are candlestick patterns. Okay, so and these candlestick patterns to retail traders is suggesting lower prices. Okay, that being said, we go down to a daily time frame, and we do also see that price has respected this down close candle right here. Price went up, came down into it, went up again, and we are inside this single bullish order block right here. And we do see that momentum push to the upside, and we also have a fair value gap inside that range. And like I said, of course, everything is a probability. Price can still dump as low as coming below here. Okay, but from my experience, actually, price doesn't usually close below this range. Okay, So, but it can do that. Okay, you just have to be open-minded and see what price is doing. Okay, so if price do come back here, then we look to buy, and this will be a high probability to risk, and a very high probability. There's a lot of probabilities that it's going to continue higher if it does come back here. But from here now, we can still engage price to the upside, knowing fully well that we have an engineer liquidity right here, which are the trend line liquidity that is present in price. I also have that engineer high right there. Okay, so we can drop to a, I want to delete that to have a clear chart. Okay, so we can drop to a 4-hour chart and actually see what prices do. Okay, so ideally, like here, we do see a break of structure. Why is it a break of structure? You understand why this is a break of structure, right? Here, this last swing high, price broke above it, right?
Yeah.
Okay, so now all these ones, price retrace a bit, then we are in what we call accumulation, manipulation, and distribution to the upside. So this level here also is last week's low. I told you earlier on that liquidity pools or liquidity concept, we have Asian highs and lows, we have daily highs and lows, we have weekly highs and lows, we have monthly highs and lows, we have 3 months highs and lows, right? Okay, and yes, 3 months highs and lows basically. Okay, so when price rate those levels, we do most of them, especially when we know the narrative, expect a reversal to the upside or to the downside. So in this scenario now, we don't have a swing low, which is last week's lows also. So if price dump into it with the context in mind that we do have buy stops resting above these highs, right? Price is engineering liquidity in those levels. At the time when we're expecting or anticipating higher prices, okay, we do have a break of structure here. We have a favor look up that price has filled, but hasn't filled completely. So we want that done. Then here, I can wait for lower time frame confirmation when price gets to this level, right? I will not just buy here and put my stop loss here. It's way too much, kind of. Let's look at that range. From that level, we're going to enter from the range from that level here is minus 144 pips. That's way too much. Okay, so let's look at actually the potential reward private. Okay, so the potential reward here is like 250 pips thereabout. Okay, so you can just wait for say Monday's price action and allow it to go as low as like minus 50 or 100 and just buy, use a 50 pip stop, target 150 pip profit, which is just 1 to 3, and it's not bad for the week. Okay, so allow price to dump into that, right? And wait for price action. And what's price action you're waiting for? You're waiting for XMT divergence, you're waiting for structure shift, stop hunt, all those price action on a lower time frame, like a 5 minutes, 3 minutes, or even a 1 minute chart at a time period, a specific time period, which are those, what are those time periods? Especially London King Zone. And I've told you the time period of 9 to 11 a.m. in the morning, or 1:30 to 3 p.m. in the afternoon, Nigerian time now. Okay, so at that time period, when you see those setups around this level, then you can engage price, especially when we have XMT divergence backing us up. Okay, so that's where I stopped before we this stop then. Okay, so I said for my day trades, I will now go to the economic calendar and see if there is a high impact news or a low impact news or a medium impact news on the Canadian dollar and the Japanese yen that I'm hoping to trade. Okay, so here now, this is the news for next week. Okay, don't mind the time. The time here is calibrated to New York. Okay, so on Monday we have British pound medium impact news. None of my business. I'm not trading British pound. I'm trading British pound, but I'm using this example now. Okay, on Tuesday we have dollar medium impact news. On Wednesday we have euro impact news. We have euro impact news all day, right? They also have dollar impact, high impact news by 7:30 a.m., which is around 12:30, 1:30. Okay, dollar on dollar. Then we also have another high impact news at that same time. We have New Zealand medium impact news. So basically, there is no new that is going to push price for us for Canadian dollar Japanese yen. There may not really be that much volatility we're expecting, but still we can still engage price. But there's no news for stop, so much volatility may not actually be the same, but it can still be there. So, but it can actually be in a range. Says there is no news to push it. It is news that push back. Okay. Then, say for instance, we have an high impact news on CAD with Japanese yen now, and they are high impact news. What I will just do is that if the high impact news is around New York Q-zone, I want to establish my position around the London Q-zone. I move my stock to break even and expect the news to now assist me to push price to my desired level. Do you understand the way I use this news?
Yeah.
Okay. After that, before I place a trade, I'll go to. Now I'm giving you all the tools, and I hope you do make use of them. I'll go to Forex sentiment, my Facebook community, and look. Okay, so these are all the checklists are always in place before I even pull the trigger at all. Okay. Yeah. So I'll check my Facebook right here, and check for Canadian dollar Japanese yen. Basically, I use this to check what sentiment say. What are the majority of retail traders or traders generally doing? Are they buying or are they selling? Okay, I ideally want to be going against what these guys are doing. Okay, against what the traders are doing. So I did like traders on the top. Okay, so the sentiment here. Look at the sentiment. Crazy. Okay, this sentiment is bad, man. Wow. Look at the number of people that are wrong. 94%. Maybe I'll trade CAD Japanese yen this week. Wow. This is interesting. Now, look, can you see this? Majority of traders are what?
Like the top effect.
Short.
The heavy
against what the market should do, right?
Yeah.
This is the right scenario for me. So when I see this, and price is already approaching my level, I'll be very sure. Of course, I won't risk my whole capital. I will still maintain my risk. That's part of the things I do. Okay, 0.5% risk. And the reason why I'm doing that is because I may be wrong on my entry. Okay, so price may just take me out, right? I'll still want to enter again. Of course, I will not. Even if price takes me out with this now, it won't matter to me, right? Okay, I will just still wait for another opportunity, not selling opportunity. I'll still wait for another buy opportunity to engage. What I'm saying is that this sentiment here, these are for my day trades. Okay, I've already explained how I arrive at a bias on buying and looking at the charts together, right? Okay, seeing the levels I want to trade up. I've marked out the levels I want to trade up, and I was not looking for even the sell scenario at all. I wasn't paying attention to that. I was just paying attention to the buy side. Okay, now I'll check the calendar to see if there is a news that will help me. There is none. Okay, we'll just expect normal price action. Okay. Price may, of course, it may just be crawling, but it will get there. Okay, so then after I've established all that, okay, I want to check what majority of traders are doing, because majority always lose, or most of the time, majority lose. Okay, sentiment. Do you understand? Sentiment is me wanting to do the reverse opposite of what majority are doing. Okay. After or of course having my bias already, but even before I came here, I'm already expecting something, and this is what I actually want to see, and it's perfect. Okay, so here now it is evident that retail traders or traders in general that have their position. This is my FS book. My FS book publishes what real life traders are doing in their life account. Okay, on CAD Japanese yen here we have 94% of traders net short. So when I see this, so I have a lot of conferences coming together to support my buy idea. So that's basically how to trade crosses or any currency pair.